None whatsoever. Never did. The press runs away with things. No, I have no intention of firing him. I would like to see him be a little more active in terms of his idea to lower interest rates. This is a perfect time to lower interest rates. If he doesn't, is it the end? No, it's not. But it would be good timing. It could have taken place earlier. But no, I have no intention to fire him.
And on the back of those Trump comments again, futures are higher. We're also checking the S&P leaders right now, best performing stocks on the S&P in the pre-market. Jacobs Solutions right here at the top of the list. Those shares up over 7%. Tesla shares up over 6%. We're going to talk a lot more about Tesla just a bit in the show. Illinois Tool, MGM Resorts, and Palantir rounding out your best performers. Then we have the other side of the coin, the S&P laggards in the pre-market right now. You see right here at the top of the list, Enphase Energy. This is following earnings. A lot of tariff pressure on this company. Shares falling double digits right now. Ingersoll Rand, Packaging Corp, Cardinal Health, and Match Group rounding out your worst performers on the S&P. We also want to look at some China ETFs on the back of those Trump comments, as well as the ETF tracking Europe. We're going to be talking with an EU trade representative coming up in just a bit. Taking a look at the Chinese ETFs first, we're seeing the MCHI and the FXI both up about 1.75%. The European ETF, the IEUR, up over 2%. The down here, the Mexican ETF, up just over 0.5% right now in the pre-market. We also want to check the automakers this morning. Taking a look at those, you're seeing Tesla right here at the top of the list, again, off of earnings, followed by Ford up over 1%, General Motors up over 1.5%, Stellantis, big boost there, shares up over 5.5% down here, Toyota, those shares up over 2% again in the pre-market. And we're going to take a look at metals. Gold hitting an all-time high yesterday, just pulling back a bit in the close. Right now we're seeing gold actually pulling back quite a bit right now in the pre-market, pulling back about 2.5%. Remember, this is a safe haven play many times. Silver up just very fractionally right now. Platinum up over 1%. Palladium up just about 0.75%. And we'll look at currency as well. The dollar breaking a 3-day losing streak yesterday. Take a look at the dollar right now. You're seeing right here. I just want to show you this. This is the dollar and the euro since the tariffs were announced. You can see the euro's gained more than 5% on the dollar over that time. The dollar index itself has fallen over 4.5%. Again, we're going to talk to an EU trade representative coming up in just a bit. And a quick look at bonds this morning. Not a lot of movement when it comes to bonds. We are seeing them decline just a bit on a basis point level, about 7 basis points, but kind of in the action, same kind of action we've been seeing in recent days. Right now, the benchmark coming in at 4.33. Okay, that is your setup now. We want to turn to the global markets. Investors all around the world digesting those new comments from President Trump and Treasury Secretary Bessent suggesting a potential de-escalation in the U.S.-China trade standoff. Our JP Ong is live in Singapore with the reaction in Asia. Our Juliana Tattlebaum is in London with the European trade. JP, good morning. Let's begin with you and some fresh comments from China this morning.
Absolutely, and the comments from U.S. President Donald Trump and Treasury Secretary Scott Bessent really raised a lot of eyebrows here. But the big question is, what is China's reaction? How are they receiving this? Well, they are viewing this with skepticism and a bit of dubiousness. Actually, in fact, we heard from the Chinese Foreign Ministry today saying that the U.S. should stop threats and coercion if it wants an agreement, and also that the U.S. cannot be asking for a deal with China while also enacting extreme pressure at the same time. Also raising the possibility that they are viewing this as an insincere offer from the U.S. president. However, this raised enough hopes that maybe things will de-escalate just a little bit, and that'll be good enough for everybody. We saw Chinese markets today react quite positively with the Hang Seng popping in today's session. Also, across the region, we saw gains in South Korea, Australia. Pretty much the mood across Asia, including that in Japan, also lifted. But again, time will tell, and the only time we'll really see a lock, at least in a lock in this positivity, is if tensions do de-escalate, and if a deal is made to make sure that any tariffs do not rise any further between the world's two largest economies. Back to you guys, and good morning.
JP, thank you very much. JP Ong, live in Singapore. Now time for a closer look at the early trade over in Europe. Our Juliana Tattlebaum has much more from London. Juliana, good morning.
Hey, Frank, good morning. Well, here in Europe, it's really all about that catch-up trade. Wall Street rallying later in the day yesterday after European markets had closed. So we only posted modest gains yesterday. This morning, much stronger moves to the upside. The Xetra DAX up more than 3%. The CAC 40 in France up 2.3%. FTSE 100 and the FTSE MIB also trading higher. That outperformance in the DAX is being driven in part by a substantial move higher in SAP. The German software company beat earnings expectations in the first quarter despite cloud revenue coming in shy of estimates. CEO Christian Klein told CNBC this morning he was confident that the business was resilient even amidst current tariff uncertainty. And you can see shares up almost 10% this morning. Another name we're watching closely, BP. Shares are set for their biggest daily move since February. This comes after activist investor Elliott disclosed a stake of more than 5% in the oil major. Frank?
Juliana, thank you very much. Our Juliana Tattlebaum live in London. We now want to turn to Tesla. Those shares climbing despite missing on the top and the bottom line in its latest earnings report. Total revenue fell 9% from a year ago, while automotive revenue, that dropped by 20%. Tesla citing the need to update lines at 4 of its vehicle factories to start making an updated version of its popular Model Y, and citing that as part of the reason for the drag. On the earnings call, CEO Elon Musk saying that his time spent running the Department of Government Efficiency will drop, quote unquote, significantly starting next month. Musk also discussing the impact of President Trump's tariffs on Tesla.
Tariffs are still tough on a company when margins are still low. But we do have localized supply chains in North America, Europe, and China. So that puts us in a stronger position than any of our competitors.
And Tesla held off on promising growth this year and said it will revisit its guidance in its second quarter update. Again, shares of Tesla up over 6%. All right, take another check of U.S. stock futures this morning. You can see right here we're in the green across the board, solidly in the green. Part of that off the President Trump comments that he has no plans to fire Jay Powell. Also him saying that he's going to be nice when it comes to trying to trade deal, seemingly giving investors a lot of confidence. That looks like it's going to open up more than 600 points higher. With that, let's bring in Lizzie Evans, managing partner at Evans May Wealth. Lizzie, good morning. Thank you so much for joining us.
Good morning, Frank.
All right, so Lizzie, you sent us some notes, and you're citing some of the bearishness out there. I couldn't get the words out. I want to combine cite and bearish together. Some of the bearishness out there. We're looking at the AAII survey, bearishness just increasing. Also looking at Polymarket, their odds of a recession increasing over the last couple weeks as well. But then you cite this other thing. It's the Bank of America Fund Manager survey that shows we're seeing some of our most bearish levels, 5th most bearish level in the last 25 years. The other 4 are buying opportunities. So where are we at? Are we in the face of a recession where we need to batten down the hatches? Or are we right in the middle of a buying opportunity?
Well, Frank, that is the $1 billion question. I think both in surveys and then what I hear every day from retail clients, sentiment is terrible. And if you look at that, I think that Bank of America Fund Manager survey is very interesting because the other 4 times, 2001, 2009, 2019, 2022, all 4 of those times in hindsight were excellent buying opportunities. But what we know is that bottoming is a process. Oftentimes that process can take several months, so patience is key. And what will be critical is to determine how some of these softer indicators that have turned more negative. Usually it takes 3 to 4 months for that to work its way into the hard data. So the longer this uncertainty persists, the longer we have negative rhetoric out of the Trump administration, the more damaging that is to the market. So the commentary that we heard out of the White House yesterday is certainly positive, but I think we need to see some progress being made beyond just commentary.
So, Lizzie, I would imagine a lot of your clients are coming to you looking to play a little bit of defense, at least somewhat when it comes to their portfolios. Where are you seeing opportunities for defense? One area that's been mentioned quite a bit is the defense sector. And this morning we're getting some news that Spain plans to up its defense spending. Do you see that as a good defensive sector for this current environment?
Well, sir, I think that you have to look at the individual, and then I think whenever you have periods of significant volatility like we have, if your asset allocation needs to be readjusted. And so with these rallies we're seeing, if going into this sell-off, you were improperly positioned, you should use the rallies to basically sell and rebalance into an appropriate asset allocation because volatility is here to stay. I continue to believe that we are in a secular bull market, and for that bull market to remain intact, leadership has to remain intact. So longer term, I do think that technology leads the market. I think financials are set up to do very well, particularly if the economy does not deteriorate materially.
Well, I mean, you're leading me to my next question. What other areas would you put money to work if you want to be a bit more offensive as opposed to defensive? Over the next week, we get a couple more Mag 7 earnings. Obviously, we're just coming off Tesla yesterday. Is the Mag 7 where you want to be, or are there other parts of software, tech? I've heard some people talk about software and also cybersecurity. That really seems to be a secular trade right now. A lot of people concerned that the trade war could kind of balloon into some other type of conflicts, either in the digital space or some other ways.
Yeah, I think it's a great question. I think you see companies like Netflix really rallying on insulation from tariffs. So I think, from an investor standpoint, in a lot of ways, once we know the rules of the road as it relates to tariffs, you can look through the individual companies to determine where the supply chain is, where revenues are coming from, because I think that is critical. And the setup for active management, again, once we know the rules of the road as it relates to tariffs, will be very important. So you can't look at it on a monolithic basis, but if you look at the individual company, once we know in fact what the tariff policy will be, I think that there is opportunity, and we've seen several of the darlings of the market really sold off indiscriminately. So it's still, I won't say that there isn't more downside to come on technology, but the Nasdaq's down 20%. So I think that part of the market is really oversold and set to rally. But again, I think we're still bouncing here until we find bottom.
Lizzie Evans, great to see you as always. Thank you very much.
Thank you, Frank.
All right, we got a lot more to come here on Worldwide Exchange, including the one word that investors have to hear today and the stock pick that every investor needs to know. But first, Europe pushing back on President Trump's trade demands. We're going to talk to one of Europe's top trade reps on what it'll take to get a deal done with the White House. Plus more on Tesla and Elon Musk shifting his focus back to the EV maker. We're going to get the take from one former Tesla executive on just how significant that move could be for the company's road ahead. Also, shares of Oklo under some pressure ahead of the open as it loses one high-profile leader at the center of the AI arms race. A very busy hour still ahead. Worldwide Exchange returns. Stay with us.
CNBC. Live ambitiously.
The Bond Report is brought to you by PIMCO. The Bond Report is brought to you by PIMCO.
I see ambition as enriching your entire life, your financial life, your personal life, and the lives of people around you, your community. My ambition is to build people up.
It's a new science that could disrupt the medical industry.
The project is to understand the genetic makeup of Asians and to find out which of those genetic markers are ethical markers and not disease markers.
We're taking the bone marrow cells from the patient, making the edit, and we're putting it back into the patient, making a drug just for you.
I think that this technology is going to totally reshape how people have children.
The Edge dives into the world of genomics.
To Worldwide Exchange. Time now for your big money movers. Some big stock stories this morning. Enphase Energy, those shares tumbling. After first quarter results, those missed forecasts hurt by softer demand here in the U.S. You can see shares are down more than 11%. The solar company also issuing some weak guidance for this quarter and says tariffs could reduce margins by 6 to 8% in Q3, primarily because its battery cell packs are sourced from China. Shares of Oklo, they're dropping as the company says OpenAI CEO Sam Altman is stepping down as the board chair. Right now you can see they're flat. They were lower just a bit ago. Altman's involvement in helping the nuclear energy startup raise funding and go public last year has been a draw for investors, even though it's not profitable and hasn't finished developing the small reactor it plans to use to produce power. Oklo saying Altman's departure will open the door for collaboration. However, it did not offer any details. Bristol Myers is falling after the company's schizophrenia drug failed in a highly anticipated phase 3 study. That drug, which was approved last year, was being tested for as an add-on for people using antipsychotics. Bristol Myers acquired the drug when it brought Karuna Therapeutics for $14 billion. Shares of Bristol Myers, they're pulling back more than 2.5%. All right, turning to President Trump's global trade war, the Wall Street Journal reporting the U.S. is pushing to have the U.K. reduced its tariffs on autos from 10% down to 2.5%. That push comes as Britain's finance minister, Rachel Reeves, is scheduled to meet with Treasury Secretary Scott Bessent this week to do a little trade talk. Meanwhile, the European Commission is pushing back on apparent requests by the White House for countries to decouple from China as a condition to reach a trade deal. The European Commission President, Ursula von der Leyen, telling Politico that countries, they are lining up to work with the bloc over economic anxiety around U.S. tariffs. For much more on this, let's bring in Valdis Dombrovskis, EU Commissioner for the Economy. Valdis, good morning. Great to have you join us this morning. Valdis, can you hear us? Oh, good morning. A little bit of a delay, but I'm glad you can hear me. Let's start off with this. The European Commission President is saying a lot of countries are lining up to become aligned with the trade bloc. When we're talking about countries lining up, what are they lining up to do? Are we talking manufacturing? Are we talking services? Exactly what are they lining up to do?
I can speak in this case on behalf of European Union. So from a European Union side, we are ready to negotiate with U.S. administrations, and actually already this engagement is ongoing to avoid application of those tariffs. Also from our side, we have indicated that in case of those negotiations not leading to positive results, we are also ready to respond with counter tariffs. And from our side, we have already put some concrete proposals on table. For example, as regards industrial goods, we had come forward with a proposal on zero for zero tariffs and so say awaiting response from U.S. administration on this concrete proposal, and also waiting to hear from U.S. administration what concrete expectations would be there from their side, because we see that tariffs are actually economically unjustified. They are going to hurt both EU economy, but even more U.S. economy, and we should be working to avoid it.
So, Valdis, you're certainly an advisor when it comes to all these trade deals. You don't have the final say, but you're certainly a voice in the room. So I do want to ask you, we're getting these reports that the U.S. would like to see countries and trade blocs like the EU decouple from China in order to get a deal done with the U.S. How much truth is there in that? When you're having these conversations, whether they're out in the open or back channeling, how much pressure is it on the EU to completely decouple from China as opposed to de-risk?
As you know, the EU policy indeed is about de-risking, not decoupling. In any case, there are a number of concerns which we share with the US about China on its industrial overcapacities, on its non-market policies and practices. So we're ready to work together with the US also to see how to best address those issues. But again, also here, slamming tariffs against us, it's not the best way of getting the allies on board.
All right, so if you don't think it's the best way, I do want to ask you, what does de-risking mean in this current environment? The EU president, she came out with that term a bit ago, probably about a year and a half ago or 2 years ago, to talk about de-risking from China. But the global landscape, especially when it comes to trade, has changed quite dramatically. Before, you were worried about the influx of Chinese imports, and now you're worried about tariffs from the U.S. So in this climate, what does de-risking from China really mean?
Well, first of all, it means identifying strategic dependencies and addressing those strategic dependencies by strengthening EU own production in certain strategic sectors and diversifying our trade and investment partnerships around the world. So it's also about diversification. That's why we are actively engaging right now also with strengthening our trade relations, concluding the new trade agreements with different partners around the world. Recently, we concluded the agreement with Mercosur. We modernized our agreement with Mexico, with Switzerland. We are engaged with a number of negotiations with India, Indonesia, and many other countries. So we are seeking indeed to broad and balanced relationship without allowing excessive dependencies in certain areas.
So Valdis, you mentioned the last two countries you mentioned just now were India and Indonesia, both of them in Asia. We also saw President Xi of China make a kind of a tour of Asian nations as well, basically rallying those countries to be trade partners with China and to strengthen their ties with China. How active is the EU when it comes to other parts of Asia outside of China as part of this de-risking strategy and making deals with them?
Well, indeed, I mentioned our ongoing negotiations with India, Indonesia, but we are also negotiating with the Philippines, with Thailand. Just recently, we started negotiations with United Arab Emirates. So we are looking around the world, and indeed the focus right now is on Asia. to have more trade agreements which will provide more opportunities for EU economy, for European companies, and will be mutually beneficial.
All right, Donis Dombrovskis, great to have you here. Thank you very much for your time and your insight. You have a great day.
Thank you.
Still on deck here on Worldwide Exchange, two of this country's biggest tech companies reportedly set to face the wrath of European regulators. We have all the details when Worldwide Exchange returns. Stay with us.
Opportunities can be hard to find, like catching lightning in a bottle. In uncertain times, it's tempting to retreat or simply wait and see. At CME Group, we empower those who act. We deliver tools to help manage risk and capture opportunities in every market climate, across every major asset class, to seize each possibility at precisely the right moment. CME Group, opportunity is everywhere.
Don't miss our all-new weekday lineup. US Markets Edition, Squawk Box Asia, The China Connection, Inside India, Access Middle East, CNBC, First in Business, Worldwide.
Ambition to me is the American dream. It's why my mother came over from Taiwan. It's why people watch CNBC, because they want a better future. I was working as an analyst in Shanghai when my company landed in the news on accusations of espionage. I decided right there and then that I wanted to be on the other side reporting on the news. I love bringing transparency to complicated topics. I think it's so important for us to deliver the right numbers to our audience so they can make better investment decisions. San Francisco was built on ambition, a belief that anyone can disrupt any industry and change the world.
Next on Unlocked, dramatic renovations.
I'm not sure we would have done the renovation in the beginning if we'd have known what it was going to take.
Three friends bought an abandoned high school and transformed it into this apartment building. A couple turns an absolute wreck into their dream home, then say goodbye to electric bills. A 117-year-old house gets a total recharge. Now it unlocks more energy than it consumes.
Getting rid of gas and moving to a completely electric building.
Next on Unlocked.
For Musk, this is the fork in the road moment. I mean, I believe, look, there's a lot of important conference calls that he's had. I think it's the most important conference call he's ever had because of the political damage, in terms of the brand damage that he's created as part of an administration where the tariffs are hurting Tesla.
That was Dan Ives from Wedbush on CNBC yesterday, framing Tesla's earnings call as pivotal for the EV giant and for CEO Elon Musk. Musk apparently listening to the souring investor sentiment, recently revealing he'll be spending less time doing government work. Take a look at Tesla shares. They're higher this morning, up 6.5%. Welcome back to Worldwide Exchange. I'm Frank Collin. Coming up this half an hour, we're going to have much more on Tesla results. We're going to talk to one former company leader on what Musk's attention refocused, what that could mean for Tesla. But first, let's get you ready for the trading day ahead. We begin with the U.S. stock futures. The Dow and the NASDAQ both breaking a four-day losing streak this morning. You can see futures, they're higher across the board. The Dow looks like it would open up about 650 points higher. The NASDAQ, the best performer on a percentage basis, up but just about 2.5% right now. So this action after the president said he'll be, quote unquote, nice when it comes to a China trade deal, and also said he has no plans to fire Fed Chair Jay Powell.
None whatsoever. Never did. The press runs away with things. No, I have no intention of firing him. I would like to see him be a little more active in terms of his idea to lower interest rates. This is a perfect time to lower interest rates. If he doesn't, is it the end? No, it's not. But it would be good timing. It could have taken place earlier. But no, I have no intention to fire him.
And on the back of those comments, a look at the NASDAQ 100 pre-market leaders and laggards. Let's start with the leaders, Tesla, right here at the top of the list. Again, we're going to talk a lot more about this company just in a bit. AppLovin, Palantir, NVIDIA, and PDD rounding out your best performers on the NASDAQ 100. Then the other side of the coin, the laggards in the pre-market. Take a look. Baker Hughes, the worst performer, pulling back about 2% following earnings. followed by Intuitive Surgical, Regeneron, Mondelez, and American Electric, rounding out your worst performers on the NASDAQ 100. We're going to take a look at some of the ETFs tracking China stocks. Fresh comments from Beijing this morning on potential de-escalation of that trade war with the U.S. Taking a look, you see the FXI, those shares up just about 1.75%. The MCHI moving a bit higher since we started the show, up just about 2%. Then the KWEB up almost 2.5% right now. We also look at currency this morning. The dollar breaking a 3-day losing streak yesterday. Taking a look, so you see the dollar compared to the Chinese yuan actually gaining, strengthening against the yuan, up just about 0.25% since the trade war started back on April the 3rd. However, the dollar index pulling back more than 4.5% during that time. We also want to take a look at the bond market this morning. Take a look at those yields. Yields on the benchmark moving down about 5-7 basis points from the levels that we saw yesterday, coming in at 4.34 this morning. We also want to take a look at oil this morning. Take a look at oil. Oil getting a bit of a bid lately. WTI up just about 1.5%. Brent crude up about 1.33%. Natural gas moving up more than 1%. Okay, that is your setup now. We want to go to one of your big money movers this morning, of course. That's Tesla. Shares rising even as net profit fell 71% and revenue by 20%, both missing estimates. The EV maker struggling to overcome competition overseas, especially in China, and damage to the brand from CEO Elon Musk's role in the Trump administration. But on the earnings call last night, Musk says he's ready to focus more again on running Tesla.
Starting next month, I'll be allocating far more of my time to Tesla. And now that the major work of establishing the Department of Government Efficiency is done.
And Tesla says it may have to revisit its sales forecast for the year as the trade war between the U.S. and China could weigh on demand. Musk saying he'll continue to advocate for lower tariffs, but that decision is entirely up to President Trump. Joining me now, Karim Busta, partner and co-founder of startup incubator DVX Ventures. He's also a former VP at Tesla. Karim, good morning. Thank you for joining us again.
Good morning. Thank you for having me, Frank.
All right, so looking at Tesla shares, they're up right now in the pre-market, despite the numbers maybe being a bit disappointing. It seems like a lot of that is due to Elon Musk saying he's going to get back to focusing more on Tesla. You've worked with him. What does that mean for him to go from something that he seems passionate about when we're talking about Doge to go back to, I guess, his main job? When he says he's going to focus more on that, what exactly does that mean in your experience?
I think the key, we have to take this as a great news for the company. And to understand that, you have to step back a little bit and look at the real situation of the company that came out of the results announced yesterday and the real situation that we've seen from the past few months. Company, if you look at the results from yesterday, for the first time in many years, the automotive segment, if you remove the credits, the profit made from selling zero-emission credits to other manufacturers, the automotive segment by itself has lost money. That's a big deal. So that requires a big shakeup, a big focus on two things, essentially the new products to be launched and acceleration of the move to the robotaxi initiative. So having the CEO back focusing on these two major initiatives is obviously great news for the company, but it doesn't reduce the nature of the challenge, which is absolutely huge for the company. Not the first time, but something really significant they're going to have to pull off to make this happen.
All right, let's talk a little bit about that challenge. Tesla seeing falling sales in a number of different regions, including the EU and China. Some of that has to do with price, at least with China. At the same time, margins have been under quite a bit of pressure. When we're looking at Tesla long term, you mentioned robotaxi. That's obviously a very important play for this company. As they go forward, do they want to create lower cost models to kind of get a bigger installed base? Do they want to create these new models that may potentially, cost more money? How does Tesla compete going forward and also fulfill its long-term promise of having a lot of robotaxis on the roads, which are vehicles owned by people that can also be used as robotaxis?
I think it's a combination of both. What has made Tesla successful in the last decades is this ability to create innovative products that customers love, and at the same time, is going through larger portions of the segments of the market with lower cost vehicles. With regards to the robotaxi, we shouldn't underestimate the magnitude of the challenge to make this new line of business work for Tesla. They first have to solve for good the self-driving and the autonomous vehicle challenge. they're running behind. That's the reality. There's many players that are probably a few years ahead. Tesla has to catch up on that. Then once you solve the self-driving challenge, able to have cars drive autonomously, safely, reliably throughout cities, you have to create a real business out of it. And that takes time, takes a lot of capital, takes a lot of effort. And again, there's a lot of people that are already there that have been doing this and experiencing for several years, like Lyft and Uber partnering with Waymo. So these are all competitive threats that are going to make the challenge really difficult for Tesla. I want to say it's actually... Yeah, go ahead.
No, please go ahead. I'm sorry to interrupt you.
And I was going to say the fact that the challenge is difficult for Tesla is actually good news for us as consumers, because it means that there's competitors, whether it's on the EV market or on the autonomous and the robotaxi, there's competitors that are out there that have innovative, that are providing solutions that customers love. So that's good for everybody. Lower prices, more competition, and better service for everybody.
Before I let you go, I got to ask you about what you're doing with DVX Ventures and also your ETF, the AIS ETF. It's the Internet Artificial Intelligence Supercycle ETF. I'm looking, since this trade war started on April 3rd, or the tariffs were announced, I should say, it's down double digits, actually hit harder than the Mag 7 and other parts of the market. What's going on when it comes to this whole idea of an AI supercycle and this AI build-out? Yesterday, we got some reports that Amazon may be slowing down some of its CapEx plans when it comes to data centers. What's going on when you're looking at that sector and your ETF? Are you thinking about maybe rebalancing, adding some different companies? How are you viewing all this?
Yeah, I think we will also a little bit of context around what we're doing here at DVX. So we made the observation that in our world there's regularly these big, what we call super cycles, these mega trends, technology-driven, that change the society, change the world, change the way we work, etc. And it's been very difficult for investors to participate in these super cycles because the existing products, usually ETFs, thematic ETF, tend to focus on a couple of very big names. Take AI, a lot of people focus on NVIDIA, for example. And we realize that there's a lot of activity going on during a super cycle that investors can benefit from. If they look at under the hood of all the players, that participate in the super cycle. For AI, think of all the work, all the infrastructure needed to build these data centers. So we build the artificial intelligence super cycle ETF with that concept of mind. We call it the bill of material. Now, to your point about temporary drop in prices linked to all the uncertainty that is going on in the world, we don't think that's reflective of the reality that is the AI is going to be the next super cycle. It is going to change the world. It is going to change absolutely everything in the way we work, in the way we live. And we've built this ETF to reflect this long-term trend over the coming years. So absolutely not worried. We actually think we're on the right track with the way we build this ETF to participate in this mega cycle that is going to happen.
Karim Busta of DVX Ventures, also former Tesla VP. Really great to have you here. Always appreciate your time and your insight. You have a great day.
Thank you very much. Thanks for having me.
All right, coming up here on Worldwide Exchange, a fresh downgrade for Apple. Details on why one bank just isn't buying Cupertino's optimistic outlook for one key device. Shares of Apple, however, they're up in the pre-market, up over 2.5%. We'll be back in just a moment.
For the fourth consecutive year, Interactive Brokers is one of the fastest growing prime brokers and is now number 5 in Preqin's ranking of top prime brokers. Interactive Brokers serves both organizations and individual investors. To get better results, get a better platform. The best informed investors choose Interactive Brokers.
My mentor always told me that your career is going to be a marathon, not a race. Often, you're not the only one running, so learn from those in front, support those behind, and when it counts, win well and lose well.
Before I go out, for me, the more relaxed I can be, the better. As soon as I try and
create that situation where I'm tense. I'm like, okay, something big's about to happen. I need to do this. Like, that's when I just don't perform to the level that I need to. And maybe that works differently for other people, and other people, you know, they go and have a kick with a football, or they go do some boxing and they get hyped up. You see their warm-ups, they're getting sweaty, and I'm just lying there having a little nap.
I can't believe that landed. What, you can have a nap before?
I'll have a nap. Yeah, it's like the lower my heart rate, the better I'm going to do. Because when I get in the car, you know, as soon as the helmet goes on, you're in your own world. It's me, it's my car, everything's disappeared, and it's just you have to focus on what's ahead of you. I'm still nervous, like I'm still crazy nervous before races. I'm an overthinker, so I think of a lot of stuff. So the more I can almost calm myself down and just think, okay, all I got to focus on is the start. Then after the start, the rest will happen.
Welcome back to Worldwide Exchange. As we close on the 6 a.m. hour, a check of a few big stories that we're following this morning. The EU officially hitting Apple and Meta with fines under Europe's Digital Markets Act. Apple was fined about $570 million over its browser options. Meta fined more than $200 million for breaching that same law. Shares of Intel, they're rising this morning. Bloomberg reporting the company will unveil plans this week to cut more than 20% of its workforce in a push to streamline operations and refocus on an engineering-driven culture. Shares of Harley-Davidson, they're also higher. Bloomberg also reporting that India is considering cutting tariffs on high-end motorcycles, including Harleys, to zero. And Warner Brothers Discovery becoming the latest streaming service to crack down on password sharing. Its streaming service Max has launched a new feature allowing users to add an extra person who doesn't live in the same household to their subscription for, of course, a monthly fee. All right, turning back to the markets, investors digesting those fresh comments from President Trump on Fed Chairman Powell and on tariffs on China. Taking a look at futures, you can see they're still in the green across the board. The Dow looks like it would open more than 600 points higher. And with that, let's bring in Amy Wool-Silverman, head of derivative strategy at RBC Capital Markets. Amy, good morning. Good to see you.
Good morning.
All right, so futures higher today. The president saying he's going to be nice when it comes to a trade deal with China. Also saying no plans to fire Jay Powell. So a lot of optimism out there. With that, what's your word of the day?
You know, it's so funny, Frank, because my word of the day is limbo. I was thinking yesterday about the limbo that we've been in during this 90-day pause. You know, perhaps the headlines you just mentioned is going to give some clarity. We'll see. I think that investors have learned that nothing is final until it's actually final in this environment. And we've been at this pause where volatility is simply higher in this regime. You know, we're very much over that 20 psychological pull in the VIX, and we'll probably still stay there even with these headlines.
All right, that's fair enough. When we're looking at the options market, how are people positioned? Are they positioned for more downside, or are people trying to look for a potential bounce? Of course, yesterday we saw a bounce. This morning looks like we're going to see a bounce. How are people positioned?
Yeah, you know, I think the last 24 hours could change things. I'll say coming into this prior to the headlines, people were still positioning for downside. They've been very concerned about what companies are saying on earnings. They've been concerned about when companies are just taking guidance and kind of throwing it out the window because they have no clarity. Again, that's why we've been in this high volatility limbo regime. And then certainly given what Trump has said, and if he gives more clarity to the idea that they could walk back tariffs from where they are at this level with China, that could certainly change. But people were positioned to the downside.
So positioned to the downside. We had a guest on earlier that cited the Bank of America Fund Manager Survey. This is the fifth most bearish that people have been, the other in 25 years, by the way, just for that time frame. The other 4 times turned out to be big-time buying opportunities like 2009 and 2022. If people are positioned in this bearish way, how does that usually play out if what we saw yesterday and what we're seeing today is sustained?
Yeah, that's such a great question. And of course, when you look to history, the past 20, 30, 50 years, typically, you know, these crises have at some point been a buying opportunity. The issue, Frank, is the timing around it, right? Like you can kind of be right on the global idea that we'll eventually have the recovery, but if you mismatch the timing, you'll still get a little bit burned. And that's what's been very painful for investment managers right now, is getting that timing right, getting that clarity when, you know, we've been in this 90-day hold. So I think we still haven't seen those bullish positioning yet. We haven't seen that change in sentiment. People, I think, are just trying to slog it through earnings season. But certainly any rhetoric like what we have seen this morning could change what the outlook is going forward.
So with that in mind, Amy, I know you don't give us a specific pick, but what's an interesting play right now for people looking to put some money to work?
Yeah, one thing we have been looking at is consumer staples. The ticker is XLP on the ETF downsides, looking at put options. And of course, I'll give the same caveat. The headlines today could change things if we get clarity. But folks have actually been flocking there, Frank, as a safe haven. And what our research analyst has actually been very concerned about is that you're actually going to see further cuts in this area as the consumer gets hit more. It's a place where the options market pricing on downside has actually been relatively inexpensive compared to other ETFs, and so that's one thing we like on a sector basis.
So price to the downside, you said, has been relatively inexpensive. I would think it would be a lot of bets for the upside, right? I mean, because people get defensive and staples are defensive.
And that's why you've seen that pricing the way it is, because people kind of think of it as this first order defensive company. And when our research analyst actually goes bottoms up and actually looks at where there should be downside revisions, he actually thinks it could still be hit given what he has seen and what he thinks management teams will do on this earnings cycle.
Amy Silverman, always great to see you. Thank you always for the time and the insight, especially the look inside the options market. Have a great day.
Thank you.
All right, here's what to watch today. We get the latest flash manufacturing and services PMI figures as well as new home sales data. The Fed also releasing its latest beige book. We're also going to hear from 4 central bank officials later today. Then on the earnings front, we get results from IBM, Chipotle, AT&T, Whirlpool, Southwest, and Boeing. Also, you don't want to miss a CNBC exclusive with Boeing CEO following those results. That's just after 9 a.m. on Squawk on the Street. And before we let you go, one more look at futures. We've been saying all morning long, in the green across the board. Big upside moves when it comes to futures. It's like the Dow would open up about 650 points higher. A couple headlines giving investors some confidence this morning. One, that the president says he's going to be nice when it comes to a trade deal with China. The other, he says he has no plans to fire Jay Powell. We also want to take a look at Tesla shares moving higher after earnings. Elon Musk also saying he's going to focus more on Tesla and kind of move away from government work. Also, a quick look at Apple and Meta, both of them facing fines in the EU. That's going to do it for Worldwide Exchange. Squawk Box starts right now.
No, I don't do that. Good morning. Futures pointing to some nice gains this morning, sizable for stocks after yesterday where the major averages recouped most of Monday's big sell-off, 1,000-point gain in the Dow versus the previous day's 900-plus point gain. All of this on some encouraging headlines, but pretty amazing. It doesn't take much. Helping to power today's pre-market gains, President Trump says he has no intention of firing Fed Chief Jerome Powell and said he never wanted to. And it'd be nice if he lowered rates, but it wouldn't be the end of the world if he didn't. Totally, kind of like 180 degrees. Yeah, and the stock of the morning, Tesla, is up about 7% after Elon Musk said he would spend less time working for Doge in the federal government. It's Wednesday, April 23rd, 2025, and Squawk Box begins right now.
Good morning, everybody. Welcome to Squawk Box right here on CNBC. We're live from the NASDAQ market site in Times Square. I'm Becky Quick along with Joe Kernan and Andrew Ross Sorkin. And as Joe mentioned, the U.S. equity futures this morning looking pretty good, up by about 650 points for the Dow. S&P futures up by 111. The NASDAQ indicated higher by 460 points, reversing the losses that we've seen recently. Of course, there were gains the day before, but Joe's right. It was these comments coming out of the president, not only on the idea that he would not fire Jay Powell, the chairman of the Fed, also that negotiations with China are going to be a little more pleasant than people had been anticipating. He said he's not going to play hardball. He wants to get in there and have some nice conversations. And that has taken off some of the pressure that we've seen in recent weeks. If you take a look at Treasury yields this morning, let's see where things stand. The 10-year is a little lower at 4.33. The 2-year still at 3.83. So you still see some heightened, at least on the shorter end of the curve. Gold prices have come back down a little bit. And you're talking about a decline of about 2.5%. That's a drop drop of $86 back to $3,332 an ounce. The dollar this morning also looks to be trading a little bit higher. Not a huge gain, but up by about 0.1%. Year to date, it's still down by 8.7%. And then if you check out Bitcoin this morning, you will see that it is up another 2.4%, back to $93,684.
Meantime, we got some breaking news for you this morning. The European Union hitting Apple and Meta with fines as part of an investigation into tech firms deemed as, quote, gatekeepers. Under Europe's new Digital Markets Act, Apple's fine is about $570 million. Meta's is going to cost the company about $229 million. The EU also ordering Apple to remove technical and commercial restrictions on app developers' ability to inform users about cheaper and alternative ways to buy digital products outside the App Store. As for Meta and the regulator saying that it is still evaluating whether a new option for Instagram and Facebook users to see less personalized ads complies with a cease and desist order. Apple has said it will appeal that decision. Meta says it will likely appeal. So we're going to keep our eyes on that story. Europe, see, this becomes to me an interesting chess piece in the sort of larger dance, right?
I'm doing a dance over here.
She's trying to get on her chair.
My chair collapsed and then I pulled it up and now it's stuck too high.
Yeah, now it's too high.
I can't win.
Will it go back down or will it go all the way?
No, that's why I was trying to dance it back down.
Don't we have?
We'll work on that in the meantime.
President Trump saying he has no intention of firing Fed Chair Jay Powell before his term for leading the central bank before it ends next year.
None whatsoever. Never did. The press runs away with things. No, I have no intention of firing him. I would like to see him be a little more active in terms of his idea to lower interest rates. This is a perfect time to lower interest rates. If he doesn't, is it the end? No, it's not. But it would be good timing. It could have taken place earlier. But no, I have no intention to fire him.
The president has increased his criticism of Chair Powell lately, on Monday calling him Mr. Too Late and a major loser, but he spelled it correctly, L-O-S-E-R, versus most of our viewers that spell it with two O's. The Wall Street...
When you're talking about who?
Yeah, exactly. It could be you, it could be me, it could be Andrew, it could be Trump, could be... the Wall Street Journal says some of the president advisors told him that an attempt to fire the Fed chair would result, no flies on them. It could result in some pain for the financial markets, like yesterday, and a legal battle. Treasury Secretary, or the day before yesterday, Treasury Secretary Scott Bessent was said to be one of the people who spoke with Trump. But, it was Hassett last week, who supposedly has a line to the president and doesn't just speak, out of turn, who said that they were investigating ways of doing it. So whatever happened, I think someone, maybe the lead editorial in the Journal said, they're not sure what happened, but we'll take it at this point, whether you can learn from this. Same with China.
Yeah. But if you're not talking to China, right, there are still no talks.
Yeah, there's no talks.
So this is like all lemmings. Just everyone's like, oh, now he's going to be nice. Tomorrow he won't be nice.
Scott Bessent told it like a small group of people. It would be nice, if everybody had that info at the same time. I mean, I'm not totally...
JP Morgan.
I'm not totally shocked that we're not going to, completely decouple from the world's second largest economy. And all along, it's been sort of in the back of people's minds that we're, talk tough and try to get something. We may not ever get anything.
We should get like a comp reel of all the things that he said, just even like the last 3 weeks, and just play them back to back, and then.
Well, the thing is we feel better today because this is what we would like to hear, that the markets are going to be allowed to, or the Fed's going to be allowed to operate independently, that we are going to have a calmer conversation with China. But the problem is you don't know what damage has been done to the confidence because everybody's on tenterhooks. You don't know what's coming next. But hopefully we can put some of this back in.
The last paragraph of it's called the up the down tariff escalator. If Mr. Bessent can move markets merely with comments that a trade truce is coming, imagine how the markets would respond if Mr. Trump simply called the whole thing off.
Let's call
simply called the whole tariff
Yeah, and it's a reminder that this is self-inflicted, the volatility that we've seen in the market.
It's self-inflicted. It's whether you believe that there's something that needed to be done that actually could be done.
Not necessarily. Look, I agree that there are areas
You
where
mean
that we could
way
get
that
better
it's been
deals. Yeah, there are ways to get better trade
capricious.
agreements.
The capricious nature of the...
Correct.
Right.
There are ways to get better trade agreements, and he's right. We've gotten ripped off in a lot of ways. We have done it, though, to exchange, in exchange for peace around the world and for making sure that we have access to different things. It's been a huge part of our global defense. So you got to think about the trade-offs that come with those, too. But he's right. We have given up.
And there's a few places
on the economic front.
I think India, looking at some of the, it'd be nice.
India are talking.
It'd be nice to have a great new
But
deal.
here's the thing: even if he does not go as far as you think, the toothpaste is out of the tube. You can put a little bit of the toothpaste back in, but you know how like there's always that little like edge, a little crust on the edge. That's not going back.
I don't want that part back.
I don't know whether that's. I don't know whether that's a toothpaste that's really the best for cleaning your teeth. Or I mean, by the end of this year, we could be at. I don't know where we're going to be. Will the dollar continue falling? Will no one invest in the United States anymore? Will no countries trust the United States forever? I don't think all
it's all on the margin.
Some of it.
It is on margin. And David Solomon made me feel a lot better yesterday.
I'm saying it's on the margin.
I don't
but
think
the margin is at some point in a $1 trillion economy. The margin.
I think
big.
it'll all. It's. I don't know if it happens, but there's a possibility that there's actually more positive things than happen than negative after it's all said and done.
We'll see. I mean, it feels better to hear what he's saying overnight, for sure.
I don't. What I took some heart in today was that the group in the administration that are pushing for the 40% top rate, there's like 3 of them, and everybody else is like, "What are you talking?
Outside
you're
advisors.
a Republican? Or what are you exactly? How do you think? Why do you think you got elected and won a majority?"
Well, it's interesting because it tells you a little bit about who has influence this time around, who his closest advisors are in the White House versus last time, where it was Gary Cohn and some others who were.
Well, the whole, the populists, it's populists versus more classic conservatives, and we'll see who wins out. I think, I'm not for nothing, but aren't you glad Bessent's there?
I'm very glad.
That's what I think. I'm glad Scott's there, and and he seems kind of. He's so calm, and like when we talk to him,
so well.
and I think he might be like that when there's chaos around him, and he's like, hey, this is just, and when push comes to shove, I don't know what actually happens. I'm just worried it's going to be so long. I think we're talking about 2020, 2029 or something, 2028.
It has not yet been 100 days.
You're not going to make it.
I was thinking the idea that it has not been.
I've said the country's going to be fine, but I mean, and I'm back to the counterfactual. Most Trump supporters at this point, even if they're disillusioned, it would take probably World War III to wish that Kamala Harris had won that election.
I think that one of your fans and Trump supporters wrote on Twitter yesterday to you that an auto pen would have been better.
No, but I don't.
So
I don't
let's
think that's.
just understand.
I don't think
how
that's
people
true.
Really.
Well,
that
that's
was
what
a
we
remark about.
Well, did
Biden
you like the 4 years of auto pen? Did you like the 11?
Yeah, actually, the markets did. The economy did. Yes, actually.
No one's wages went up, and you had 11 million illegal aliens come into this country.
Yep.
I know that's okay with you, but you're worried about this one going back. The rule of law was.
I am worried about the rule of law.
Yeah, but not for 11 million. They totally ignored the rule of law coming here. Now you're talking about it again. So it's back to whataboutism. And so 11 million is fine. Well, when did you talk about the rule? When did you talk about the rule of law when the border was open?
Constantly.
Okay.
Oh, we got a lot to get through this morning. We're going to talk about some of the stocks on the move, including Tesla, when we come back. We'll talk about that first quarter results from that company. Also, the impact of Elon Musk devoting more time to the car company and less time to government work. He says that's going to start next month. Stay tuned. You're watching Squawk Box on CNBC.
Vietnamese people enjoy a coffee in the morning. I live here and I have to say that I love the traffic here, which seems like a chaos to foreigners, but it's actually an organized chaos. Everything works. Xin chào. Hello, my name is Khánh Vi. I'm a content creator and a TV host from Vietnam. Here we are at District 1, which is the central of Ho Chi Minh City. I think this is one of my favorite spots in the Independence Palace. This is the way of selfie for Gen Zs. 0.5. I'm originally from the north central province of Nghệ An, but I've stayed in Ho Chi Minh City for a couple of years now. Ho Chi Minh City has such great energy, and you can feel that when you come here. Winter Boulevard, and I'm so excited to bring you around our largest city in Vietnam. And here's what I do in my downtime.
CNBC has the most affluent audience in television, and my job is to tell viewers how the wealthy make it, spend it, and give it away. I grew up in upstate New York. Both my parents were artists, so we didn't have money, but they taught me to appreciate beauty and also see things a little bit differently. For a lot of people, their ambition is to get wealthy, but money itself doesn't have any meaning. It's how you make it and what you do with it that gives it purpose.
In the age of digital disruption, get fresh business perspectives on the fast-changing world of tech, innovation and startups from one place. CNBC.com/technology.
This is CNBC on assignment at L'Oréal's US Research and Innovation Center.
Pledge is to invent the future of beauty, and therefore to do that you need the future of research centers, and that's exactly what's being built here, potentially the blueprint for our future R&D centers around the world. And it's going to serve the USA, our #1 market, but not only, because here will be invented new formulas that will serve consumers all around the world.
With a competitive beauty market constantly evolving, innovation is crucial to stay ahead. Consumers now seek products that cater to their unique skin tones, textures and concerns rather than one-size-fits-all solutions.
Personalization is definitely the future of beauty. Real personalization is also what I would call the ideal curation, is giving you the most precise recommendation of existing products, but which combination will be perfectly matching your needs, your skin tone or your hair type.
Real money, real debate, real-time moves. Scott Wapner, live from the New York Stock Exchange. Halftime report, CNBC.
Tesla CEO Elon Musk says that he will be spending less time with the Department of Government Efficiency starting next month. That message came on Tesla's first quarter earnings call and helped push shares up after hours. Musk said that he will continue to spend a day or two a week on government issues for as long as President Trump wants him to do so. But Tesla acknowledged that changing political sentiment could weigh on customer demand. Take a look at that stock this morning. It's up by about 6 1/3% after dropping initially on the earnings release that came out. As for Tesla's first quarter results, earnings and revenue both missed analysts' expectation for the sixth time in the last 7 quarters. Automotive revenue was down by 20% from a year ago. Net income dropped 71%. Tesla said that it would revisit its 2025 guidance in the second quarter update. When it came to tariffs, Musk said that Tesla is in relatively good positions compared to other automakers, but he did remind analysts that any tariff decisions are President Trump's domain.
I'll continue to advocate for lower tariffs rather than higher tariffs, but that's all I can do.
On other topics, Tesla told investors that it remains on track for a pilot launch of its driverless ride-hailing service in Austin, Texas by June. It also said that it's on track to begin building humanoid robots on a pilot production line in California this year. Joining us right now to talk more about Tesla's quarter and Elon Musk is William Stein. He's Truist senior analyst. William, what do you think? That is a lot to digest and try and figure out what to make of it all.
Yeah, it was a bit of a chaotic report from my perspective. It didn't depart meaningfully from my financial expectations. A lot of the consensus estimates had not been updated. Ours were among the ones that were. So relative to our model, the quarter and the outlook weren't, really all that bad. The miss surprisingly came in energy production and storage and on operating expenses, which are being, inflated currently to address these AI opportunities. But some of the outlook commentary around operational objectives, mostly the ones you mentioned, but also the concept of bringing a new lower cost car to market sometime in the first half of this year is something they reiterated. That was a bit of a surprise, right? There's only about 10 weeks left. That gap, let's call it 10 weeks between discussing a car and actually selling it would be a first for the company. Normally they show a car and then maybe, 6 months later at the shortest, they'll be selling it. So that was a bit of a positive surprise as well. And some of the things you mentioned also.
So, William, they made $400 million, but they sold, if I got this right, $595 million worth of regulatory credits. The stock is called higher. Does anyone care? Are we supposed to look at this like, know how many years Amazon all they did was grow revenues and weren't really profitable? Is it the same kind of deal here? We're supposed to look at the future and not care about current quarter operating results? They didn't make any money, did they?
They did have positive operating and free cash flow in the quarter. I can't, really compare this to Amazon necessarily. I don't cover that stock.
What about the regulatory credits? Would they have made money if they hadn't sold the regulatory credits?
I haven't looked at that. I'd have to take another look to jog my memory, but that is, real revenue. One of the important and sort of remarkable transitions that's happened to Tesla over the last several years is that they have sort of breached through this level of profitability whereby they no longer need to access capital markets to continue to operate and grow. This happened, to the best of my recollection, 2 or 3 years ago. That was a significant change. And Musk has stated that he'll flex pricing in order to achieve volume growth, even taking it as low as break even on cash flow. They did better than that this quarter. They also built quite a bit of inventory in the quarter, and that influences that dynamic, right? In a quarter that's coming up where they don't have factory shutdowns and they're not likely to build quite as much inventory, I would expect to see profitability rebound at least somewhat.
William, the idea of Elon Musk kind of re-engaging in the day-to-day operations at Tesla, being more present there starting next month, how important is that?
I think that's perhaps the most important positive update. Again, from the negative side, we already addressed it. It's operating expenses affecting margins and the energy generation and storage revenue. But from a positive perspective, sort of, he gave a sense that things are normalizing and the operational guidance that they've provided, not the financial targets which they essentially withdrew. They talked about, returning to revenue growth in 2025. They didn't reiterate that. In fact, they sort of withdrew that comment and they said, we'll readdress it next quarter, as you highlighted. But some of the other operational updates were positives. The new car coming, as I mentioned, robo-taxi starting in June, FSD continued to be on track to deliver this unsupervised dynamic, something we've written quite a bit about. And, we have some concerns and doubts about their ability to do that. But from the company, the plans are more or less on track. And I think that, and certainly led by Musk's more or less full-time return, were the key positives.
But you still have a hold on the stock.
Yeah, that's right. I mean, we're quite concerned about the AI projects and their ability to deliver what Musk has targeted. This, again, I highlighted this 10-week window, which would be unprecedented for the company to actually be selling this thing, selling the new car in the first half. Also, FSD, we've reviewed this product many times. You don't need me to search on YouTube to find failures of that system, and yet it's marketed as something that essentially works today. So these are concerns. Optimus. I was going to say the robotic system, this humanoid automaton called Optimus, is more than a twinkle in Musk's eye, but it's not like it's here and now, and yet a lot of the value of the stock is packed into that project.
It must be. Because it's almost an $800 billion company. If no Democrat or liberal ever buys another Tesla, even if will they come back with a lower price Tesla, or will only half the country? And Republicans weren't really big EV buyers in the first place. So where do they need to get back to where they were in terms of selling so many cars? It was amazing, because I've said it many, many times. That's all I see on the road out in a lot of parts of New Jersey are Teslas, just one after another. Are they going to return to that, William? Can that happen?
Well, I believe the Model Y is still the highest selling vehicle today. So, I mean, people are still buying them. I can't make the, political commentary, but I think what will help is lower cost vehicles. I'm not sure that the one that's, upcoming in the next 10 weeks, supposedly, because it's made on the same production line as the Model Y, I'm not quite sure they're going to be able to make that a compelling value relative, for example, to a Toyota today. They're not going to be able to achieve, price parity. So it's a challenge, and that's part of why, we don't have a more optimistic view on the stock.
William, thank you.
Thank you.
Coming up, Meta's oversight board slamming its parent company over some content changes from the beginning of the year. Details after break. Squawk Box. We'll be right back.
CNBC. Live ambitiously.
One partnership is bringing technology and modern farming together to advance agriculture and feed a nation.
We are starting with an automation platform. So a system which is controlling relevant machines, processes.
This is our prototype for the precision nutrient injector that interfaces with the Siemens platform that we're building. We're able to store over 100 different types of recipes. And on demand, the machine will actually mix it up and then deliver it to any Go bids.
It is in the same moment giving remotely access to Artisan Green at any point of time. They can see what is the status, what is their energy consumption, what is their water consumptions.
The Energy Manager module from Siemens allows us to monitor the equipment, and with that we're able to make sure that the equipment's running at its 100% efficacy, and as a result, electricity costs that way.
Sponsored by...
I've always had an ambition to do something I loved. I actually got my degree in hotel and restaurant management, but I had a thing for numbers, and that's how I got onto Wall Street. I became a trader. I traded all different kinds of asset classes. The energy in a newsroom, when there's a big news day out there, feels a lot like the energy on a trading desk on Wall Street. There's a lot of activity. The stuff we do at CNBC means so much to so many people, because it empowers you with knowledge and with everything that you need to make the right decisions.
Access Middle East isn't just another finance show.
If you think about the UAE's trajectory, we actually think very, very long term.
It's a deep dive into the region's shifting power dynamics. What's different about Trump 2.0, particularly for the Middle East? Ambitious economic drive and the personalities pulling the strings.
Tariffs, trade wars, for whatever word you want to use. I think these are all challenging, not just for China, I think for the world.
Join me, Dan Murphy, for Access Middle East, your edge in Middle East markets.
It's a new science that could disrupt the medical industry.
The project is to understand the genetic makeup of Asians and to find out which of those genetic markers are ethical markers and not disease markers.
We're taking the bone marrow cells from the patient, making the edit, and we're putting it back into the patient, making a drug just for you.
I think that this technology is going to totally reshape how people have children.
The Edge dives into the world of genomics.
Squawk on the Street, CNBC.
AT&T just, you go ahead.
AT&T is just reporting its numbers. Those earnings are coming out at 51 cents a share. That beat estimates of 49 cents. Revenue coming in at $30.6 billion. That is higher than the $30.3 billion the street was expecting. In fact, if you look at this, AT&T either met or beat on all of its consolidated expectations. That revenue up 2%. That came with wireless services revenue of about 4.1%, fiber revenue growth of 19%, adjusted EBITDA 4.4%, and they expanded their margins over 90 basis points year over year. Adjusted earnings per share up by 6.3%, free cash flow up by 13.5%, and John Stankey is doing a little bit of a strut here with a little bit of what's happening. You can see the stock's up 3.5%. John Stankey, the chairman and CEO, says our business fundamentals remain strong, and we are uniquely positioned to win in this dynamic and competitive market. Says that they're growing the right way as customers continue to choose AT&T Fiber and 5G wireless. Now, this has been quite a run for AT&T. If you check it out for the 1 year, their shares are up by almost 70%. This is Stankey really delivering on what he'd been promising. It's been 5 years now. Maybe one of the big points on this is that AT&T is not only affirming its full-year financial and operational guidance, they say that they plan to begin a share buyback in the second quarter. That's the first buyback the company has had since 2020. Since John Stankey came in. I spoke with Pascal Desroches, the CFO, and he made some points on this. Again, this kind of stands out. This earnings season, we are hoping to hear from companies. A lot of guidance is going to be taken down with uncertainty, not knowing how the tariffs are responsible for these things. But AT&T said that their first quarter was so strong that they feel pretty good about saying, yeah, we're going to stand by our guidance for the full year. Pascal says, in a world with lots of uncertainty, we are in a business that all consumers need, irrespective of economic cycles. Now, I did talk to him about tariffs and how that's going to impact the company. Not a huge impact because they spend so much of their money here in the United States. Huge CapEx. I think for the year, their CapEx is $22 billion that they're expected to spend. It creates jobs here. He did say, though, that they're a reseller of phones and other devices. Those aren't their products. They don't get to dictate the price, so that will be borne either by the manufacturer or the consumer. Right now, there's an exemption on devices, and we'll see. He also said that the hardware they use when they're building out their networks, those are things that can be higher priced if tariffs continue, but a lot of those are long-term contracts where they have fixed prices for things, so they expect to get through 2025 with very little exposure to the tariffs. Again, that share buyback is a big deal. They're doing that for three reasons. One, their visibility into the business. Two, the 70% sale of DirecTV, which it is expecting to close in mid-2025. That will give them some extra cash on those things. And they've paid down about $32 billion in debt over the last 5 years since they've been at this. So again, the stock looks right now like it's up by about 3%.
I'm just looking. So he started July of 2020.
Oh my God! Well, and then it went down. And then
stock is probably in July. Looks like it was at $23.
Yes, but prior to that, in March, it was up at 29. So before, so then it looks like. I mean, it really does. And then if you go back, Andrew, all the way,
I think it's up 20-some%.
You go back to 2000. You know, back before 2020, and it was up.
I just looked at the 5-year stock chatter a second ago.
But not since he started.
No. If I looked at the 5-year chart, it's up 20% over the last 5 years. If you look at the 1 year, though, it's up.
If you go back 5.5 years,
9%.
If you go back 5.5 or 6 years, it's still down. It's a long saucer.
I was looking because every CEO in America really measures themselves based on the day they started the job.
Right.
What the stock was and what the stock is now.
No, but it's doing. I mean, it was all the way down.
Kramer's been saying recently that he has changed his mind on the stock, that he's a believer.
It was all the way down to 13 and change. So it's doubled since from the lows in July of 23 or whatever it was. But I mean, think about that. It took a while to buy those media assets, and things got worse as you were buying them. But looking back on it, I mean, I'd like to own those assets. It'd be kind of cool instead of broadband or wireless or some boring business. But it was a melting ice cube.
Well, think about the mistake of just buying it.
That's right.
And think about what they could have happened. It's a counterfactual because you don't know what they could have bought or done.
Not only was it costly and took a lot of time, and then you had to unwind it, but those assets I mean, it was obvious to Bukis at the time, I think, wasn't it?
Well,
remember, they were dealing with the Trump administration.
Terribly overpaid. Then the government tried to block them.
Right.
Yeah.
It was, but to think about all the things you could have done.
What was
with
that company
money.
going to be? A Disney or something? I don't know. It was a
What
Comcast?
they wanted to be?
Yeah, like a Comcast or something.
That's what they wanted to be. Yeah.
Coming up, much more, and everybody should have wanted to be a Netflix, I guess. Coming up, much more on the markets with the futures up this morning. On a variety of things, including President Trump's comments that he had no intention of firing Fed Chair Jay Powell. We'll be right back.
My earliest ambition was to be a teacher, but I felt I couldn't afford it. My mother thought it was the highest calling, and I gave her a promise that one day I would be a teacher if I did well enough in life. It was my ambition, and I was able to achieve it. So now I can teach you so that you can be as ambitious as you want about whatever you want to do. CNBC is my home. If you love your work, well, maybe it's life itself.
Home to the world's biggest population and a fast-growing economy. Is the EV story resonating amongst Indian consumers? CNBC goes inside India to give you insights into the opportunities and challenges shaping the emerging powerhouse. Narendra Modi seeks a historic third term.
Several indicators they cannot afford to look the other way.
It's all part of the normal flow of market forces. The stories, people and businesses behind its rise. This is your gateway to India.
Kelly Evans, The Exchange, CNBC.
By the Economic Club of New York yesterday, I spoke with legendary activist investor Dan Loeb in an hour-long conversation. He had some fascinating comments. He, of course, is the CEO and CIO of Third Point, the hedge fund that he started 30 years ago in 1995, now managing $11.7 billion in assets under management. And on stage, he weighed in on just about everything, including today's market environment and how the sentiment on Wall Street has switched from a sense of optimism at the start of President Trump's term to a feeling of uncertainty in this moment and its potential lasting impact. Here's what he said. He said, I would not underestimate the resilience of the American economy. I think there will be residual concern about some of what he described as the capriciousness with which some of these issues have been dealt with and confidence in the rule of law. So he making some pretty interesting comments there in expectations being met, calling effectively the administration capricious in terms of how they've gone about all of this. He also weighed in on the changes to Delaware law. This is interesting given that he's an activist, shareholder, and clearly shareholder rights are interesting to him. He said there's been an enormous overreach by the Delaware judges over whoever adjudicates these things, determining what is fair or not fair for CEO compensation. That's obviously something he's gone after over all these years. That is out of bounds. I think it is for shareholders to determine. I think it is understandable that public companies would go to a venue that doesn't overstep what should be their duties around securities and corporate law. Third Point is incorporated, we should mention, in Delaware. The hedge fund has been a beneficiary of the run-up among the Mag 7 stocks with big bets on Meta and Amazon, though, interestingly, Loeb says in the last few months he shifted away from these investments, exiting his position in Meta and reducing his investment in Amazon. Loeb says he's leaning further into credit, an area he sees as an important piece now for the future of Third Point, It's about 50%, almost 50% of the business right now. And he says there's a lot better risk reward. He equates his equity business longer term to what he thinks is going to start to look like Mark Rowan's PE business at Apollo. He says it will always be part of Third Point's DNA, but he sees massive opportunities in private credit. Of course, Apollo is now effectively a credit operation with a sort of bolted on private equity firms. So I think when you think about Third Point in the future, you could see something that looks a lot more like a credit operation with a little bit of activist equity.
Was he wholly talking about Elon Musk's compensation? Are there?
We talked. It was in reference to Elon.
Right. That's what I mean. Can you name? Are there? I don't know. Are there other examples where the Delaware courts have done what I thought was just that was outrageous and for Musk?
Right.
But has it happened with other CEO compensation? Have they?
No, but there's been other suits that people have felt.
But not on CEO compensation.
Not on CEO compensation.
So he was talking solely about Musk.
I was surprised only because he has effectively attacked companies, typically Delaware companies, over comp and all sorts of other things quite successfully. Right. And by the way, the Delaware court has been an ally of a lot of the activist investors in America in terms of giving them leverage over boards. And so to think that he's actually in favor of companies going, for example, to Texas, where, by the way, activist shareholders are not going to have any real leverage.
But that was a case where the shareholders, at least in the case of Tesla, were really on Elon's side on that.
Right, but I think that Dan's comment was actually broad. I mean, we were talking about...
It was broader, but that's why I was asking whether you have other instances where there...
I actually don't know of other instances, but I do think that he has a relatively negative view, or dim view, I should say, of Delaware.
Musk... and many times he said, we're supposed to be on Jupiter by now with like a town, with a lot of the promises he's made. But when he made that promise to get that compensation, we all said there's no way.
There's no way he'd make it, right?
And he totally did. So if you're able to do that and the shareholders benefit as well, I think that's.
And by the way, when they went back and asked the shareholders voted again.
Exactly. Right. So what are they doing in Delaware?
I don't know. I mean, I'm with you on that. I was there from the beginning. I think you've switched your view to me.
No, I always. No, what are you talking about? You don't think I thought he deserved it?
In the beginning, you thought that he shouldn't get the money. Remember?
We thought it was a crazy deal, but I also never thought he'd. I thought it was a crazy amount of money, but I never thought he'd ever hit the metrics.
Never switched. If you can do it, flaunt it. We're gonna have a guy on who, I think soon, talking about almost the downfall of Elon Musk, the hubris and what's happened. It's like you're making a prediction about the future because it hasn't happened yet, obviously.
All right, when we come back, what to watch in the markets today. The futures this morning are sharply higher. Check this out. The Dow futures are now up by 750 points after some big gains from yesterday, too. The NASDAQ up by 520 points. The S&P futures up by 130. Stay tuned. You're watching Squawk Box, and this is CNBC.
CNBC. Live ambitiously.
Today's consumers is searching in a very different way than they used to. Google still has its significance in the way search is done, but with today's AI tools and the certain apps that are being developed for travel, the consumers' behaviors are changing. There's a new generation of travel, some of it from our domestic markets and some of our key markets, that actually are using AI in order to make it a decision-making process for their travel and trips. They're relying on an AI tool to be able to give them a very predictive model of what travel and what their travel itineraries are going to be like. So we work very, very closely with all types of AI tools, whether they're chatbots, whether they're search prompts, or some of the apps that are really focused on travel and tourism.
Want to make some extra money, but not sure where to start? CNBC Make It will teach you the skills to earn passive income online. Take our new online course that will help jumpstart your business idea. Get expert advice and hear real-life success stories.
Soon, you'll have the tools that you need to start your own passive income business.
Learn how to start generating additional income right now. Register at cnbcmakeit.com/passive income today.
On the next Converge, meet rising next generation leaders shaping tomorrow today.
Keep on learning. Never be satisfied with just today's outcome.
It is our responsibility to adapt. However, I think it is also important not to compromise on your values.
Whatever decision we make as a company, we always keep in our mind, what good can this do for our country as well?
Doing good for business and society are not mutually exclusive.
Find out how they're redefining leadership on the next Converge.
I was studying molecular biology, going to grad school. I started investing a little money for my dad, and I got bitten by the bug. I was a stockbroker, and it's fun, but we all wished we could just follow the markets and talk. My ambition was to be able to pay my bills and not have to constantly be selling. In today's world, I would urge a lot of people to get financially savvy. Squawk Box and CNBC, it is my home. It's the greatest job in the world.
Squawk Box this morning, the Anti-Defamation League out with a new report showing a spike in anti-Semitic incidents in 2024. The ADL's data showing that this is the fourth year in a row in which these events have surged, breaking a previous all-time high. Joining us right now, Anti-Defamation League CEO and National Director Jonathan Greenblatt. He was recently named to Time Magazine's 100 most influential people in 2025. By the way, does that mean that means you're really influential in 2024?
Yeah, I don't know what it says about what my future prospects are.
Let me ask you this.
From being on Squawk Box so much? The Squawk was in the write-up.
Let me ask you this. The data you have that says that anti-Semitism continued to be on the rise in 2024, do you think that was there any shift in terms of if you looked over that 12-month period?
Yeah.
I'm praying you're going to tell me that the last couple of months of the year, it got better.
Well, look, I think it's certainly fair to say that the data tells us that anti-Semitism is a national emergency. 20% of the incidents we saw last year happened on college campuses, and things were certainly worse on the campuses in the first half of 24 versus the second half. But look, if you're one of the 250 some odd people who were assaulted, if you were at one of the institutions, 2,600 some odd institutions and homes, businesses were vandalized. There are more than 6,500 cases of harassment. And behind every one of those statistics is a story. There's a grandmother who gets yelled at, in the grocery store. There's a student who gets their desk vandalized, in a middle school. There's a college student who's prevented from walking across the quad simply because they're a Zionist. It's all crazy.
Okay, so now we got to go to the news of the day.
Okay.
Tell me what you think about Harvard. Tell me what you think about the Trump administration's letter to them and the reaction from the university.
Look, the reality is there are deep systemic problems, not just at Harvard, but at all of these institutions. And it's rampant in the faculty lounge. It's apparent like in the Harvard Yard. You can read it in the Crimson.
So do you support what the Trump administration has done and the way they're doing it?
I am really glad that the Trump administration is leaning in and holding the perpetrators accountable. Now the question becomes, how do you do it in a way that is strategic and addresses the systemic issues and not sort of detrimental to the whole enterprise of higher education? That's what we've got to do.
And what do you think about that?
Right.
Well,
no, you have to make, I'm saying you're either for this or you're against it. We can get into the nuances of which parts you are, but just, I'm trying to understand.
Yeah, look, I think it's complicated, and at ADL we focus on the nuance, to be frank. But make no mistake, it is a good thing that President Trump is leaning in. It is a good thing that the people who lie on their student visas or do egregious conduct are held accountable. Let's note one thing, Andrew, right here and right now. For 18 months, we could not get these university presidents to move effectively enough. That's why I released our report card.
Right.
Suddenly, when the Trump administration threatened to pull the funds, they all moved.
Well, that's the interesting part, because I agree with you
Yeah.
on a lot of what you just said. 100%, if you're not following the rules of your visa, you shouldn't have a visa. It's a privilege to be here. I'd like to see change at these universities. I do think that the hiring, the way they go about it, I do think that the idea that you have tenure for forever is part of the problem on these things. But I don't want to see scientific funds pulled as they...
I don't either. I don't want to see life-saving research stopped.
Right.
I don't want to see people in lab coats, their work ended because of the lunatics on the humanities side.
Well, go back to whether Harvard ought to realize that if your entire environment is built around hiring and promoting a certain viewpoint, if you can't be a conservative and be hired there, if you have to be woke, and it's just from the ground up, that's all you ever see, is it... See, my problem is that the Trump administration might get shut down in court.
Yeah.
They may not be able to do it this way, but it breeds. It's like almost a breeding ground for how this happens.
There is no question we need viewpoint diversity on these campuses, in the faculty lounge and in the classroom.
When the president says, we're going to, I don't mean the president of Harvard says, I'm going to push back, I'm going to fight, and everybody goes, oh God, thank God Harvard's fighting so that anti-Semitism can be...
But can I just want to...
But do you know what I mean?
Who's
the enemy? Who's the enemy that they're fighting against?
The enemy is, in this instance, that the overreach of the approach, the way the government has gone about this, and I'm Jewish, you know my views about this, I'll say it over and over again, we need to eliminate violence, we need to eliminate intimidation.
And you might need to start...
And disruption of school.
You might need to start
that's the 1, 2, and 3. So everything else, the idea...
If the courts don't stand for it, it's
the idea...
Then it doesn't work.
Right,
but leaning in, even if you're going to lose. Lena Khan leaned in for 2 years.
And I don't think Lena Khan was effective.
Can I say something? Your operation, your organization is a 501c3.
Of course we are.
Okay. If I told you that this president didn't like you for whatever reason and said, you know what, screw you. By the way, you took some PPE money, which you did, so you're on the government dole. I am actually taking away your tax-exempt status because I think actually you're a political operation. And by the way, I will tell you personally, I think you're a political operation. I think you are. Should you get a tax-deductible status? No, you shouldn't.
Wait a second.
Now let's get into a whole debate about who should get what. I'm just saying to you that once you go down this road, it is a very, very complicated place. And I think you can do tremendous damage, not only to the education system, but to philanthropy, to the way we all operate as a country.
Yep. So look, there's a lot to unpack in that. So number one, 501c3 organizations can't engage in partisan political activities. So we're involved in the public...
I understand. But you know what?
Democrats...
By the way, and that's what Harvard would say. Okay, right. Harvard would say they're not a political operation.
Correct.
But guess what? Guess what? The president's decided it is. Okay? And what I'm saying is, if the president decided that you were a political operation, I would say, by the way, I think you are a political operation, just to be 100% totally blunt about what you are. I don't believe that it's a total both sides all the time. Changes, however, whatever is going on. My point is, I don't think that you want a president or an administration to be able to decide that you are political or not political,
but they're not
because they have a view.
It's going to go through the court system.
Wait a second.
They're not going to be able to.
Harvard has an obligation to protect the civil rights of their Jewish students. Harvard and Columbia,
100%,
which they failed to do effectively.
100%.
And Jonathan, you were in favor of the administration pulling funds and threatening with funds.
You wanted them to use it. It is a rightfully rare and serious step. And what I want is them to hear the corrective things you need to do. They correct it, and then the funds get reinstalled.
Right, but can I say, I want you to scream from the rooftops. I do. I think you should. I think politicians should scream from the rooftops. I think donors should pull their money. All of those things. That's the free market. I think once you have the government deciding what is happening, and it's not really the government. In this case, it's an executive order from one person or an administration. That's when it gets very complicated.
But Andrew, it's going to go through the court system. It's not going to be allowed to not go through.
Well, we'll see. Well, here's the thing. It will go through the courts, but that will take a long time. It's expensive. It's complicated. It's going to make it very difficult for Harvard to operate the way they have in the past.
But it is going to go through the court system.
They got $55 billion in their endowment. We're $37 trillion in debt. Why do taxpayers need to fund an institution that's doing such egregious things in other respects.
Look, again, we come back to the government has the right to say, we're going to give you money, but you have certain obligations.
Exactly.
The Title VI obligates them to protect the Jewish students. But I will just say, Joe, like life-saving research, like breakthrough innovation, our higher education system is the envy of the world.
It is.
Economic innovation.
It's 30 times what it was, what we fund, and that's fine. But they have $55 billion. What is that for? If they had a shortfall for 6 months, they can't cover that while they try and get their act together on these other.
Look, they ought to be able to cover it for sure. There's no question.
And then there's other people that say there's other universities that can do research. Obviously, I mean, I did research. Some of it's good, some of it's not so good. Some of it's throwing crap against the wall. It is, and they all get funded. Some of it's good, but there are great universities that if. I'm not saying that the government can pick who's going to do it, but Stanford, Caltech.
Look, but here's the point. The point is, if you want to have a conversation about taking money away from universities across the board, that makes a lot of sense.
Don't need to take it away if they get in line. If they do,
but the idea that somehow
they change their evil ways, baby.
But hopefully, I don't know if you think Harvard's not providing the service that they say they're providing. The U.S. government gives a lot of money to SpaceX because hopefully it provides a service to the U.S. government, and they don't give as much money to Blue Origin because the product is not as good yet, okay? So that's what that product is. Yeah. If you said to me, I'm going to give the money to Harvard or I can give it to a community college, the reason you'd give it to Harvard is because right now it's providing a better product in terms of the research and development that's hopefully coming out of it, that's hopefully helping America and ultimately the taxpayers in the country.
Do you think it's okay if they really do allow and actually favor, applicants that are radically extreme, anti-Semitic? I mean, that seems to be the people that get first, and there are other people that are totally excluded.
First of all, you're suggesting somehow the entire university. Every single person is anti-Semitic. Have you been there? It's not. That's not what we're talking about.
I went to school there.
You're also talking about the humanities versus the science.
Again, I think the reality is there are real questions how again, we've seen the Jewish population plummet in these schools.
The culture
we
of the
need
university.
to look at the culture.
Something went wrong in the last
50.
Something went wrong in the last 50 years.
For sure. And again, Becky, you mentioned the tenure issue.
Yeah,
like, if you are a radical, like harassing your own students, I think there's real questions with the tenure system. But it can't be abused, and that's what we're talking about here. We need due process. We need a transparent way that we go about doing this. And then, again, that's what makes sense.
Go get Harvard with a Make America Great Again hat. Not happening.
Yeah, there is a problem when you can hide your identity behind a keffiyeh, walk across the quad, but you can't wear a red kind of
You can
MAGA
go in
hat.
with a T-shirt that says "Death to the Jews," probably, and get tenure. But you can't go in there and misgender someone. It's messed up.
I hope that that's not the case.
It is. It is. It is. It is. It is.
Again, they're
lean in. So what? So I still don't know where you stand. So you like this?
I like it. I want it to be done the right way. And if it's done the wrong way, it creates a terrible precedent.
And all I'm suggesting is that it could be done the right way, and it's being done the wrong way.
What way would
That's
you
where
do
I
it?
lay.
What way would you do it to get real action? To really, because
you want to know? I think you could pull all of the money with a very narrow letter that says you need to show us that you are eliminating anti-Semitism in the context of violence, in the context of intimidation, and the context of disruption of school.
You're not going into the root cause. That's like treating
the second you say that you're
the symptoms of cancer without actually going in.
To get to those things, the university is going to have to do all sorts of things. However,
but the
letter goes much farther than that. The letter says that they're going to audit how they're hiring, how they're bringing kids into school. They're going to take that data, by the way. All that information is going to go back to the government. I mean, there's a whole lot of things. Jonathan. By the way, on the visa thing, just 1 second, who do you think should be responsible for visas? It's called the State Department.
Yeah.
Like, why are we sitting here I'm not saying Harvard's great, but I'm saying judging these people, who's letting these kids into the country? The State Department.
And the State Department's pulling, and they are. They're pulling some of these visas.
It's not Rubio. Call Anthony Blinken. Anthony.
Jonathan, the students at Harvard who were suspended last year and didn't get their degrees, didn't get to graduate because of their activities that were seen as anti-Semitic, Eventually, those degrees were given back. How do you feel about
They
that?
were all, it's a problem. So again, if there's no accountability, there's no deterrence. If there's no deterrence, this doesn't stop. That's why Andrew's right. Like, you can be smart and sharp and hold them accountable and get them to change. But if we're too broad brush, all I'm saying is our university system, Harvard, is the envy of the planet. They generate economic prosperity, important scientific breakthroughs. I don't want to gum that up. And yet, I want the rights of Jewish students treated like everybody else. It's just about equal treatment. That shouldn't be too much.
I agree with you.
Yeah, watching those,
Amen to that.
Watching those three presidents dodge those questions.
Yeah.
I mean,
it was a shameful moment for all of us.
It just makes you wonder about whether how much is hype.
We are way over time, but we want to thank you for the debate and the conversation. I appreciate you. It's an important one. Normally we say right about now that it's 7 a.m. on the East Coast. It's now 7:10 a.m.
Because we talked so
how
long.
far the conversation went.
He's very influential.
You are watching. He's on the Time 100 list. You're watching Squawk Box right here on CNBC. I am Andrew Ross Sorkin. Joe Kern is over here. Becky Quick's over here. I don't know if that, with the boxes, probably doesn't look right. Among today's top stories, let's tell you where things stand. We got the futures are moving sharply higher this morning, adding on to today's rally. I want to get straight to Dom Chu, who's got a look at what is happening in those markets. Dom?
I'll tell you what's kind of driving things right now. Stocks green across the board this morning, guys, with NVIDIA leading the pack. Those shares are up 5.5% right now. Now, that broader market rally today is a number of reasons, right? One being that President Trump said he's willing to take a less confrontational approach to trade talks with China. Chips have been a point of interest, of course, during all of these talks, and potential trade de-escalations between countries could benefit these types of stocks. AMD, Taiwan Semi, Broadcom, Intel, all up for roughly 4.5%, 5%. GE Vernova also making gains in the pre-market after posting its first quarter results that beat estimates. The shares are up just about 8% right now. The energy business spun off from General Electric also reaffirmed its 2025 revenue outlook. The company said the guidance includes the impact of tariffs and added that GE Vernova is well positioned to navigate the current dynamic environment. And we'll stay with the earnings side of things with Enphase Energy down double digits right now, 11.5%. After first quarter results missed estimates, the solar company also issued weak guidance for this quarter and said that tariffs could reduce margins by 6 to 8% in the third quarter. Morgan Stanley adding to that downward momentum. The analysts there are downgrading that stock to an underweight from an equal weight, citing heightened downside risk to growth and margins within the rooftop solar market. So, Becky, a lot of things to get through. I'll send things back over to you guys.
Okay, Dom, thank you very much. When we come back, making sense of the markets, Bank of America Securities, Savita Subramanian will give us her outlook for equities. That's coming up next. Squawk Box will be right back.
CNBC. Live ambitiously.
One partnership is bringing technology and modern farming together to advance agriculture and feed a nation.
We are starting with an automation platform. So a system which is controlling relevant machines, processes.
This is our prototype for the precision nutrient injector that interfaces with the Siemens platform that we're building. We're able to store over 100 different types of recipes. And on demand, the machine will actually mix it up and then deliver it to any Google bids.
It is in the same moment giving remotely access to Artisan Green at any point of time. They can see what is the status, what is their energy consumption, what is their water consumptions.
The Energy Manager module from Siemens allows us to monitor the equipment, and with that we're able to make sure that the equipment's running at its 100% efficacy, and as a result, electricity costs that way.
Sponsored by Good Money.
Everything seemed legit until it wasn't.
Good Times.
The lavish lifestyle, the houses that they're used to.
Is never enough.
Someone who has a goofy social media presence could be laundering $4.5 billion worth of Bitcoin.
Fame, fortune, and fraud.
His stories were so good, they've all fell for them.
I believe in getting justice.
American Greed on CNBC.
Journalism was always the perfect career for me. I've always been an egghead and a nerd. When I'm covering tech, my job is to really take these wonky and complicated topics and distill them down so anyone can understand. Ambition definitely fuels the tech industry. There's still this air of possibility when a new tech product comes out, that it can do anything, that can change the world. There's nothing better than breaking news, jumping on camera and telling everyone immediately what they need to know. I love what I do. No day is the same. I couldn't imagine doing anything else.
Live from the New York Stock Exchange, Halftime Report, CNBC.
Look at the futures this morning. We are sharply higher. You've now got the Dow futures up by more than 750 points. S&P futures up by 135. The NASDAQ up by close to 550 points. For more on the markets right now, we're joined by Savita Subramanian. She is the head of U.S. Equity and Quantitative Strategy at BofA Securities. And Savita, this morning, it seems like there's relief that the Trump administration seems to be ratcheting down, not just on what we're talking about with Jay Powell and allowing the chairman of the Fed to say, okay, he's going to independently operate,
right?
But also on how tough we're going to be with China in these trade talks.
Yeah, no, I think that every day is another, soundbite, either positive or negative, that roils the market. I do think it's interesting that we seem to be in an environment where investors are just laser focused on one topic. So
what's that one topic?
And today,
because I can think of like four or five.
Yeah. Well, it seems to change every day, but and I don't know how we're going to end the day. But yesterday it was, is the Fed chairman independent?
Right. So is this the Fed? Is this the trade talks? Is what?
So it depends on what the the tweet or the soundbite is, I think.
Yeah.
But I think that underneath the surface, what we're seeing is really a rotation from just tech and global growth plays to value, to dividends, to, other parts of the market really taking
Okay, that makes a lot of sense. Just this idea that we don't know where tariffs will end up. There will probably be some base level.
We're assuming a de-escalation from here.
Right.
And our target for the S&P is a bit higher. We took it down after Liberation Day because I think we were surprised by how how kind of aggressive and high the tariffs were that started. I think, 5,600 is achievable by year end. That's our target on the S&P, which is a few percentage points away.
Yeah.
If anything, I think we could see an upside surprise because when I think about what's happening right now, it's all negative. It's tariffs, it's, immigration, it's inflationary, it's negative for growth. But going forward, what are we going to start hearing about? I think we're going to start hearing more about deregulation, some of the more positive themes for stocks, potentially tax cuts, et cetera. So I think there is like a runway here where we could see good news bolster the market.
And that leads us to earnings season. You're in the middle of it right now, and you're going to be hearing from companies.
Yes.
AT&T was out this morning and said, hey, it had a great first quarter and is now willing to stand by its guidance and that it doesn't think tariffs are going to be a huge issue for it.
There are some tariff-proof stocks in the S&P.
And that's what you're on the lookout for?
And that's what I love. I think they're really sort of old economy. Like AT&T is a perfect example. If you think about what we have to spend money on, we spend money on rent, on our energy and heating bills, we spend money on insurance, we spend money on, so that's basically financials, energy, telecom, which are all sitting there in the value bucket, paying nice dividends and are relatively immune to a lot of the noise that we're hearing around, global turmoil.
Are there other companies that you would put in that basket? I'm just trying to think of who is uniquely positioned for not getting crushed.
Yeah, I think that multinationals can actually do a little bit better than what's priced in, because they have a lot more optionality than, let's say, the smaller companies that just supply to the big multinationals. So I think that's another opportunity to really look within these beaten down areas, even tech. Like if you think about communication services and some of these, new media companies, these are the new staples. These are the new utility stocks that we're probably going to continue to pay for and subscribe to going forward. So,
I mean, that's a really interesting point. Are you suggesting that people should not go into the Russell 2000 right now because small companies can't go and ask the administration for an exemption from any of these rules?
Exactly.
They have less flexibility with any of these issues. I mean, it seems unfair, really. It reminds me of when the big boxes were allowed to stay open during COVID, but the small the stores
it's survival
and
of the
restaurants got
biggest.
crushed.
I think we're still in that environment because, again, just thinking about optionality around tariffs, if you're a big multinational and one region is, verboten, then you go to another region. You have options to kind of shift your supply chain. I think with the smaller companies, there's a lot of refinancing risk for these companies. So I think we really need the Fed to start cutting in order for the Russell 2000 to really work. Because
that's interesting.
These are companies that have a lot more rate risk. They're more credit sensitive, whereas larger companies have paid down their debt. They've become very immune to credit cycles, which is kind of interesting. I mean, I think today we're in an environment where stocks look pretty healthy, especially in the larger cohort. The real risk is in our treasury bonds because we've got a foreign buyers strike. We've got, the folks that used to buy treasury bonds, the Fed, China, Japan, no longer buying. You've got debt through the roof. I mean, the leverage risk basically shifted from consumers and corporates during the GFC, the global financial crisis, to the government. And I think that's the area where you could see continued
Well, then
pain.
if the Fed cuts rates, is that even going to help?
Well, that's the short end. I think that's, it's going to help with companies that have floating rate debt, like in that smaller cap sector. But I think on the long end, we're in for higher long rates for the foreseeable future.
Because buyers are going to have to be enticed.
I don't know what gets folks to come back and buy a lot of treasury bonds at this point. I mean, maybe it's solving our deficit problem, but, beyond that, I wonder if they still have that high quality safe haven status that, we used to paint them with.
Well, who else are you going to buy?
I mean,
Who's safer?
You've got.
I mean, you're talking about 30 basis points. You're saying that there's a buyer strike when we're at 440. You're ready to slit your wrist. We were at 7 and 8% for my entire career.
Yeah, exactly. But I think that's kind of where we go back to. I'm not.
What, 7 or 8%?
Well, I mean, it's higher than 440. I think 440 might be too low.
Well, if we get a slowdown from a tariff-related slowdown, we're probably going down in yields.
Well, I don't know if we get the slowdown. I mean, if you think about what companies have been saying during earnings season, it's not we're canceling everything.
What about all the uncertainty?
The uncertainty is there, but I don't know if it's actually meaningfully changing behavior yet.
Well, that would be good then, wouldn't it?
It would be good. But I think that's the reason to look for stocks that have really no limited exposure to tariff risk or can navigate tariff risk that have been sold off summarily on just the headlines of, global trade war. I think what's interesting, though, is that, we're sitting there listening to every company. We're scraping the transcripts, looking for evidence of major project cancellations, delays,
Right.
and we're not really hearing it yet. I think the longer this goes on, the longer this uncertainty, extends. And, if we start to hear the numbers going higher and higher, that would be bad. But where we are today, we haven't really seen it meaningfully hit business activity.
Liberation Day was April 2nd.
Yep. It's not that
what's the
long
date?
ago, so maybe it's
23rd, is it?
Yeah, I mean, it's a few weeks, you're right.
The 23rd.
But I think that's what we need to listen for, and
Right.
so far, so good.
Okay.
Savita, thank you.
Thank you.
Coming up, Elon Musk's Doge cut. Tesla CEO says he's going to spend less time with dealing with government spending starting next month. We'll get into his leadership and more when Squawk Box returns.
Time now for today's
She's wiping her juice hands in my pants. My name's Josh Gerasitano.
My name is V Farm.
This is what we do during our downtime.
Wow. The flavor here really, really good.
I drizzle the Nook Mam all over it. She got the watermelon juice.
You don't need to say people can
I
say
got
watermelon.
the cafe moi. Yeah, it's just a bit salty. Hold on, we're gonna get changed, okay? It reduces fatigue, it's good for your skin, and it helps the immune system. I normally have like 5 or 6. I just crack it into a plate and then have it all at once. We always come here. It's probably our favourite place. Wow, this is really good.
Inside the world's most cutting-edge technologies.
We're seeing a real opportunity for those with brilliant ideas to accelerate towards change.
Discover the secrets and turn innovative ideas into profitable ventures.
Our vision is a world where human prosperity and economic growth are planet positive.
Embrace digital disruption.
I mean, this is life-changing technology.
CNBC Tech, The Edge, only on CNBC.
Tesla CEO Elon Musk says he'll be spending less time with Doge starting next month. Joining us now with more on Musk and his leadership, Washington Post technology reporter Fez Siddiqui, whose new book is out this week, Hubris Maximus, the shattering of Elon Musk. I like that. It sounds like an ancient Roman, Fez, but I like gratuitous nastiness, the other famous Roman that we all know. I'll tell you, and you can tell me, hubris is an ancient Greek word, obviously. It usually means that someone's overestimation of their abilities causes them to crash and burn. Are we in mid crash, or because still the most valuable car company in the world, best-selling model, the Model Y? Is it a work in progress? Are you predicting that that's what happens, or you're just highlighting some of what appears to be arrogance of the man?
So, the excessive pride and ego, sort of the opposite of humility, that leads to these crashes. You'll see in the book there are 3 distinct periods depicted. Obviously, funding secured, which your viewers are probably very familiar with.
Right.
There's the COVID period. There is the purchase of Twitter. And each of these sort of precedes, this crash and this period of quiet that then leads up to something else. And we end up in a situation much like we're in today, where Elon reorients, he retools, and we end up with Doge. We're in another one of those periods. The through lines or the bookends of the book are essentially funding secured to an incident that I believe your colleague Andrew is probably really familiar with, where Elon tells off the advertisers.
Yeah, that didn't seem to really, in the long run, adversely affect it. My only point is that if I were to scour the world for the one individual who's entitled to some hubris and arrogance, given his success and what he's done with Tesla and SpaceX, and I would say he's the one guy that I might look for a different word. And he's actually entitled to a pretty high self-opinion and has backed it up, Fez.
So I would say this craving for, adulation, or this idea that we need to worship at the altar of this kind of individual, as opposed to acknowledge the reality of, they've inspired millions. And what is so wrong with acknowledging the whole reality of the person? I would think it would be, there's plenty of material out there. If, there's even an authorized biography of Musk. So I would say something that your viewers might find surprising is the book depicts so many instances of individuals who fiercely, devotedly believed in the promises of Elon, and ended up still supporting his goals, but disappointed with the man in the end.
I just haven't, I've seen his successes in terms of building wealth for individuals. I mean, I think if Ron Barron were here right now, says, I think he'd be rolling his eyes.
So Ron Barron, in the book, I talk about the time when Ron Barron was like, Elon, if something is bothering you, don't tweet. Go get an ice cream cone. Those are just sort of fascinating insights into what you have to.
He's unabashedly bullish on SpaceX and Elon Musk and Tesla and everything. I mean, this doesn't say. When Elon drops from the poster child for everything the left loves to where where liberals are keying each other's cars, I understand what happened to him in terms of the way he's viewed, but I don't think you've got the evidence yet to say that he's going to be a failure.
I don't think the book at all predicts that he's going to be a failure.
Is he going to crash and burn? Okay, crash and burn like Icarus.
No, so the
what
veneer...
What are you saying then? What's the hubris maximus, the downfall? What's it called? The
shattering. The shattering. So what shatters is essentially the veneer on Elon. Elon was, as I put this, unimpeachably our Tony Stark. And I don't think that is,
I think he just shifted from unimpeachable on the left to unimpeachable on the right. He's just got, he had the other 50%. Now he's got the polls that are taken now in terms of, it's just shifted. It's got probably as many people that idolize him. They're just on the other side of the aisle. Hey, if you go with the...
I'm not sure that, unfortunately, for Elon, I don't think that's true.
Not as many?
I think you go and look at polls.
I know
it's not about my feeling.
No, I know.
I'm just saying,
I've seen you've had a transformation.
No, I have no transformation. Okay. My only point is I think if you do look at polls, for better or worse, about Elon Musk, and I say it's unfortunate because the truth is that people have polled his popularity and it is falling.
I don't think he cares, and we'll see.
He may not, but you just said that it was equal, and I'm just saying,
I'm
like,
saying
that
context his popularity has shifted from one side of the aisle to the other.
Elon has been
Elon
has been polarizing this entire time. I'm sorry to interrupt.
Yeah, go ahead, Faze.
So Elon has been polarizing this entire time. As again, your network has to be deeply familiar with. I think you have Ross Gerber on frequently. Ross has made a transformation in terms of how he views the man. So, we're not...
I get it.
We're dealing in reality here.
It's very clear to me who likes Elon and who doesn't anymore. But you can sort around with that bad orange man. This is what you should expect, Fez. Anyway, back to the Washington Post you go, and good luck with the book.
Thank you so much. And hello from a fellow Cincinnatian.
Really? Which side of town, Fez?
Suburbs, Westchester.
See, that's a nice part of town. You know where I'm from. I'm in Pete Rose land over near Sailor Park in the west side of town. I know.
Go Reds.
Surprise, surprise. That's where I'm from. Thanks, Fez. See you later.
Thank you.
Okay.
All right, Boeing just out with quarterly results. Phil LeBeau joins us right now. He's got the numbers. Hi, Phil.
Hey, Becky, the reason Boeing shares are moving higher, the results from the first quarter. This is a beat on the top and the bottom line. A smaller than expected loss of 49 cents a share. The Street was expecting a loss of $1.29. Revenue better than expected at $19.5 billion. And this is the number that I think the analysts are really going to jump on. Free cash flow, meaning they used less cash in the first quarter than expected, negative $2.29 billion. The Street was expecting negative free cash flow of almost $3.7 billion, so much better than expected. Q1 commercial revenues, $8.15 billion, better than expected. Defense, their revenue an increase of $3.6 billion, slightly below expectations, finishing the quarter with $53.6 billion in debt. In a message to employees, CEO Kelly Ortberg says they are watching the developments in global trade. Certainly one of the things we'll be talking about with him when we sit down with him coming up just after 9 a.m. this morning. You do not want to miss this Squawk on the Street exclusive with Kelly Ortberg, CEO of Boeing. We're down here at the company's 787 plant in Charleston. We'll have more with Kelly Ortberg a little bit later on this morning. Guys, back to you.
Phil, thank you.
Coming up, a small business taking on the Trump administration over tariffs. The CEO of educational toy maker Learning Resources is going to tell us about the company's strategy when Squawk Box returns.
Let's just get a closer look.
Mom? Wait.
5 immersive worlds. one amazing theme park. Our universe will never be the same.
Oh, you gotta see this.
Epic Universe, only at Universal Orlando Resort.
Master the art of salary negotiation.
Everybody who walks into a salary negotiation is nervous.
Salary negotiations are really awkward.
The number one soft skill is flexibility,
preparation,
confidence.
Learn how to negotiate a higher salary with CNBC Make It's new online course.
I'm going to give you a roadmap for doing the hard work.
Because ultimately, if you don't fight for yourself, nobody else will.
Register right now at cnbcmakeit.com/salary.
My desire to keep learning, that is what drives my ambition. I sought a career change after 5 years working in corporate law to pursue a passion, which is to tell people stories and help our audiences make sense of the world that we live in.
So great, Becky.
What happened? We knew that there were going to be tariffs. The president campaigned on this, and I think you yourself had a plan for tariffs as high as 40%.
Yeah, we did. When they were at 20%, he had promised 60%. We figured maybe he would land at 40%. But when it went from 20% to 145, it just went completely off the rails. It's 2.5 times what he said was the maximum, and it's way into the stratosphere that no business could possibly handle. We basically stopped importing at that point, which is obviously catastrophic. The business is built on flow.
So I saw a number somewhere, I don't want to misquote it. I think you were paying about $2 million in tariffs before Liberation Day, and now you're paying?
Well, we tried to do an apples-apples comparison under the new rules, and our last year we paid $2.3 million, and we projected this year we would pay $100 million. Of course, I don't have $100 million to pay, so that'll never happen. But on an apples-apples basis, our costs went up 44 times. The reason is that we used to import at 0%, and so now our tax is 1.5 times the cost of the product.
I've used plenty of your toys in our house. If you talk to supporters of the president, they'll say, look, this is a problem. Americans got addicted to cheap imports, and we're better off finding manufacturing and sourcing here in the United States. What's your response to that?
Well, that's infuriating. Our company exists because we're able to deliver those products to you at a price you're willing to pay and that you think provides a value. So that means that the jobs we've created don't matter. In addition, by raising the cost of these products to force us to make these products in the U.S., which we believe is impossible, you'll shrink the size of our market, and you and everyone else in this country will be impoverished because your money just won't go as far. I honestly don't understand why people think it is a good strategy to make me raise my prices 70%. Who benefits from that? I won't. I'm just raising money from you to pay them. It's a tax.
Why is it so difficult or so expensive to manufacture those same toys here in the United States? You said you think it's impossible. What have you looked into? What have you found?
Well, I've looked on and off for 10 years because at various times there have been incentives to produce products in the U.S., and we've tried to even create a range we could make here. And the reality is I can't find a single U.S. manufacturer to do it. They don't want to do it. Our products are too low volume. They would like to run a very simple product that doesn't have a lot of handwork in it to finish the product, and they would like to run it for months at a time as opposed to days at a time. We have well over 1,000 products for sale on Amazon, for instance. And the reality is that nobody wants to produce products at our volume. The labor costs in this country are also very high, and labor's not really available. So we're just kind of boxed out. There is no technology solution either. We've looked for that as well.
So you filed a lawsuit. You're hoping that this goes to the Supreme Court, and your point in the lawsuit is that the president does not have the authority to unilaterally raise these tariffs without going through Congress?
That's what we believe, yes. And so we'd like a court to adjudicate that on an urgent basis.
Where does that stand right now?
Well, we filed yesterday, so we're just getting started, but we're going to race as quickly as we can to the highest court in the land and have them look at this issue. We do not believe that these tariffs were issued with valid authority.
Rick, do you get frustrated when you see big businesses lobby the administration, go to Washington, ask for exemptions, and then receive those exemptions?
That's exasperating, honestly. I don't know why companies that have $100 billion in cash are more worthy than us. We're a mission-driven business. We provide hundreds of really great jobs that are well-paying. We add a lot of value to families like yours, and the handouts go to people that have $100 billion in cash. Honest to God, it's an upside-down, inside-out world.
Will you survive this if these tariffs stay intact the rest of this year?
Look, we're getting hammered right now. We missed pulling some shipments back by a day, and it's going to cost us nearly $1 million when it would have cost us 15 or 20,000. So we're getting hobbled, but my job is to survive. So I'm going to fight like a dog to survive. And I think your family and your kids' schools want us to stay in business. So we're going to do that no matter what.
Yeah, I will say some of the toys, we even showed some of them. They're great therapy toys. Therapists that I know, occupational therapists, use them and things too. Rick,